Talk about General Electric, and of course we did have the chairman and CEO Jeff Immelt of General Electric here in South Africa recently. In fact, we carried him on CNBC Africa in a live broadcast. And this is a US industrial power, healthcare, financial conglomerate. If I'm correct, it's the fourth largest company in the US.
I think there would be various measures of that, revenue, market cap, and so on and so forth. But this one is definitely right up there. And those four business units are all quite unique and different, but they really are focused on this kind of infrastructure, power, energy focused sector, as you indicate.
$261.5 billion in terms of market cap here, PE of 28.4 and a dividend yield of 3.3%. Let's get the share price graph, Wayne, before we start looking any further at the stock. And there it is.
So that looks pretty good. It's at around $30 a share, although its all-time high was at about $59, $60 back in the year 2000. So it didn't really do all that well. But of course, that was a spell where share prices were very high. In recent times, it's been recovering.
Yes. So to get back to $59, obviously $30 has got to add to current share price.
But look, I mean, this company's gone through a tremendous transition since Jack. What the Neutron Jack, wasn't it?
Jack Welch.
Jack Welch.
Since he left. Because they sold off GE Finance, and at one stage GE Finance was half their company. And the global financial crisis and the regulations post that crisis just destroyed this business. They flogged the whole thing. They've also sold other businesses. They've bought Alstrom's power generation, and what they're doing is they're saying lighting the houses and big power generation is actually their business. Of course, they've got all the other businesses, the jet engines, the healthcare, all of this, but they're clearly focusing the company towards power generation and power
also
sets.
Though, Jeff Immelt stating that the industrial internet is the next $100 billion market, and GE is investing. And what they're talking about here is looking at the supply chain when it comes to the likes of Transnet. So your trains and your ports and basically digitizing
so
and interconnecting those industries.
Feedback from your system so that you can tweak them and make sure they operate.
And speed of execution.
Your machines will talk directly to head office.
Exactly.
And tell you whether you feel well or not. Look, their local division actually did very poorly the last while. So, I mean, there must be some concentration on that. So GE itself isn't that directly affected by Trump policies. I mean, it's a far bigger company, but clearly it is affected by it. But the outlook doesn't look bad. The worry is a 28 PE, which is, you know, it's a little high.
Maybe a stretch.
You talked about how it was at 69 or whatever dollars
59,
back in 59 back in the year 2000, but to pick up on Wayne's point, it went to $7 in the depth of the 2008.
Sounds a bit like our old mutual.
But that was because Jack Welch had really built the finance division, because it's always had a financing arm to help customers of its power generation and other equipment finance those purchases on a leased basis. But then it started getting involved in all sorts of retail finance, mortgages, all sorts of other things. So they've pared that back. They still have the trade finance linked stuff for if you, for example, want to buy one of their power stations or wind turbines or train
Don't
fleets.
Laugh. I'm highly invested in this arena. I think that power is the starting point for the African continent. You don't want to get me started on the
They
stats.
sold the consumer finance. They sold the consumer finance business gone.
So where it used to be like, you know, nuclear power plants and coal-fired power generators and so on, it's more now wind and
it's renewable, which is where the world should be going given climate change.
Exactly.
As you can see, I'm steeped in this conversation. But let's stay with GE.
And let's not forget the scanners. That the medical healthcare side of the business is like CAT scanners, you know, the big expensive equipment. If you go in for one of those, you'll notice there's a GE branding on those.
Which also follows on from our conversation yesterday in terms of people wanting to live longer, trying to find out what's wrong with them so that they can be proactive about it. Right, so are we calling this one hot or not?
I would go not hot. I think it's expensive. I mean, it's a great company.
On a 28 PE,
28
expensive.
PE, that's just steamy in my book.
Cool.
I think I'm going to go hot on it. I just think the mood with regard to capital spending has been very depressed, and given the sort of more positive outlook out there, that it's likely to continue to trade well. So.